Hello friends, I am Ram. In this video session, we are going to discuss about Senior Citizen Savings Scheme 2026. This scheme is backed by central government, one of the best scheme offering highest interest rate among the central government savings schemes. This scheme is offered to senior citizens who are looking for regular income. They can opt this scheme. This scheme offers highest safety because central government offers sovereign guarantee whatever amount we are investing in this scheme. In this video session, we are going to discuss all the details about senior citizen savings scheme, what are the eligibility criteria, how much investment we can make in this scheme, how much interest rate this scheme is offering, how much amount, how much interest we get out of this scheme, and how we can invest in this scheme. All those details we will discuss. Along with that, taxation issues of this scheme, and we will also compare with fixed deposits. What is the interest advantage we are getting out of this scheme in addition to the fixed deposits. So now let us begin the presentation to understand complete details about this scheme. Let us see one by one details about senior citizen scheme. First, let us look at features. Individual who is exceeding 50 years of age can invest into this scheme. Whoever retired in superannuation scheme or VRS, they can eligible from 55 years onwards. And for defense personnel, they can invest after 50 years also, after fulfilling certain conditions. So in senior citizen savings scheme, you can invest either individual capacity or jointly with your spouse also. One account holder can have more than one account also, but put together all accounts, you have to invest maximum limit only. You cannot exceed the maximum limit. Both the spouses can invest in this scheme either individually or in a joint capacity also. Come to investment minimum and maximum investments. Minimum investment would be 1000. Maximum deposit per person would be 30 lakhs. In case both the spouses exceeded 60 years of age, in that case you can invest up to 60 lakhs also, 30 lakhs each person. Maturity period would be 5 years, and you can extend after maturity of 5 years, you can extend in this scheme 3 years period indefinitely. It means that once you start investing in this scheme, you can extend indefinitely 3 years in a block of 3 years. Current interest rate offering by central government in this scheme is 8.2%, which is it has not changed from 2023 April to till date. This is the one of the highest interest rate offering by the central government in any saving schemes. So interest in this scheme would be paid first working day of each quarter. Now let us look at penalties for premature closures. Originally we invest for 5 years, right? If we withdraw within 1 year, whatever interest is paid already would be recovered back. So it means that your principal amount only will be paid back after interest recovery. So after 1 year, within 2 years, if you withdraw, if you close it prematurely, 1.5% of the deposit amount is deducted. Interest would be paid as usual as per the tenure. And after 2 years, but before 5 years, if you close it, 1% of the deposit amount would be deducted. After 5 years, no penalty would be there. If you prematurely close in the extension 3 years period, within the 1 year, all interest would be recovered in the same way. After 1 year, no penalty would be levied for the extension period. Now let us look at taxation, how taxation will apply for your interest amount. So whatever interest amount you are earning in this scheme would be taxed as per your tax slab. TDS would be deducted if your total interest income exceeded 1 lakh rupees. 10% TDS would be deducted if you provide PAN. If PAN is not provided, 20% TDS would be deducted. If you want to avoid the TDS deduction, if your total income along with this interest income of senior citizen savings scheme is not exceeding the taxable limits, in that case you can provide form 15H so that you can avoid deducting TDS. Also other tax benefit would be under section 80 TTB, 50,000 or actual interest income, whichever is lower, can be considered as a deduction. Now let us check most important part, returns. If you invest 1 lakh in senior citizen savings scheme at the interest rate 8.2, you would get quarterly payment 2050. If you convert that into monthly, 683 rupees, and for 5 lakh quarterly payment would be 10,250. If you convert that into monthly payment, it would become 3,416 rupees. For 10 lakhs, quarterly payment would be 20,250. Monthly conversion would be 6,833. For 15 lakhs, quarterly payment would be 30,750. Monthly payment would be 10,250. For 30 lakhs, this is individual limit. You get the quarterly payment 61,500. If you convert that into monthly, you get 20,500. If both the spouses are senior citizens, in that case you can invest up to 60 lakhs. So in that case, quarterly payment for family 1,23,000, monthly payment would be 41,000. Now let us compare senior citizen savings scheme with fixed deposits. I have taken here SBI interest rate for senior citizens. So they are offering in the similar period of, I have taken 5 to 10 years period. So 7.05 interest rate SBI is offering, whereas senior citizen savings scheme we are getting 8.2%, which is far higher, more than 1% interest rate we are getting in this. Come to other points, taxes in both the cases are taxable, but in fixed deposits, if you invest more than 5 years, you get some tax benefit under Section 80C. Regarding taxation, senior citizen savings scheme is fully taxable. For fixed deposits also mostly taxable, but whoever is still paying taxes using old regime, they can avail tax benefit if you invest more than 5 years in Section 80C for up to 1,50,000. Come to penalties, we already discussed about senior citizen savings scheme. In bank FDs, 0.5 to 1% penalty would be levied if you close it premature. Come to extension, in a 3 years blocks you can extend it indefinitely in senior citizen savings scheme. In bank FDs also you can invest and you can extend it indefinitely. Interest paid in senior citizen savings scheme is quarterly. In bank FDs based on your selection. Maximum investment limit would be there in senior citizen savings scheme 30 lakhs per person. In bank FDs there is no limit. And in addition to that, most important point we didn't mention here, that is safety. In senior citizen savings scheme you have highest safety because sovereign guarantee is there for whatever amount is invested here. You can invest crores of rupees also, you get sovereign guarantee for all your amount. Whereas in banks, up to 5 lakhs only, you have insurance guarantee if bank goes to bankruptcy. So safety is highest in senior citizen savings scheme. Also interest rates also, you are getting highest interest rates than fixed deposits. Now let us see how to invest in senior citizen savings scheme. You can invest via post office or authorized banks. There are many banks are offering this senior citizen savings scheme. You have to submit form 1 and other details you are required to provide: age proof, identity proof, you can use Aadhaar, address proof also you can use Aadhaar, passport size photographs, pension or retirement certificate for VRS and superannuation. Deposit amount less than 1 lakh cash would be allowed, but more than 1 lakh you have to submit in. You have to apply with check. Nomination up to 4 members you can nominate for this scheme. You have to give your bank details as well, where you can invest. As we already said that all post offices are allowing this investment. All the major banks like SBI, HDFC, ICICI, Indian Bank, Bank of Baroda, Union Bank of India, Canara Bank, Punjab National Bank, Bank of India. So some other major banks also offering. We have mentioned few of the banks here. Hope you like it. Please subscribe to our channel. If you like this session, please share it to your family members and friends. They'll also get benefit out of it. Thank you, friends.